What are the best trading indicators for brand new traders? That's what we're going to be talking about today, breaking it down, the absolute best of the best trading indicators for brand new traders. And definitely stick to the end of this video as well. It's going to be a quick one, 10, 15 minutes long. But at the end, I'm going to break down one of my favorite setups and favorite strategies, show it to you guys so you guys can learn from this, take this, implement this, and start to make some profit with a really simple, effective strategy. So, as someone that's been trading for 10 years, going on 11 years, and someone that's coached over 1,000 traders since 2019, what do I think the best of the best trading indicators are for brand new traders? I don't think there are any great best indicators for brand new traders. I don't think brand new traders need to learn about indicators in the very beginning. There are other things in the market that I highly recommend you definitely learn about first before learning about indicators. That's just my opinion, right? I would come in and learn support resistance and learn simple strategies that set up off key levels of support resistance and not necessarily need to use indicators to make decisions, to make money on your trades. Learn supply and demand concepts. Learn simple mechanical trading systems around just simple supply and demand concepts. And again, without indicators, you could be a very profitable trader. And the reason I recommend starting that way before indicators is what a lot of newer traders will try and do is stack indicators on top of one another, the 9 EMA crossing a VWAP, or they'll just look at an indicator to make decisions based on what one single indicator is telling them. And I look at it this way. All right, here's how I look at it, and this is why I don't recommend newer traders learn indicators in the beginning, is start to think about the two types of participants that are in the market, right? There's two types of participants. You have the retail trader, that's like me and you. Then you have the Wall Street traders. That's the big banks, the hedge funds, the institutions. So you got two types of participants, the institutions, the retail traders, okay? What moves the stock market? Money. Lots of amounts of money moving in and out of the market, right? That's what's going to cause price to fluctuate, cause price to move. So think about it. Do retail traders have billions of dollars that's needed to move a stock's price, or institutions? Well, institutions. Okay, cool. They move the market with the amount of money that they have coming in and out of the market. So they move the market. Awesome. Cool. How do they trade? Do they trade based on indicators? No. So why should we? Do they trade based on bull flags and bear flags and cup and handle formations on the chart? No. So why should we? Right? It's sexy to talk about bull flags and bear flags. It's sexy to talk about holy grail indicators. But really think about it. Retail traders solely focus on indicators, stacking them with one another, try to make decisions around indicators. That's a retail trader. 95% of retail traders fail. Institutions don't trade that way, so why are you? It just makes logical sense. So in the very beginning, I recommend learning how to identify key high probability zones of support resistance, learning some simple setups and strategies off those zones without the need of indicators. Supply and demand concepts, being able to see where these big banks, hedge funds, institutions are moving in and out of price. You can trade alongside of them, again, without the need of an indicator. Build your foundation that way first. You will realize you don't need indicators to make good money trading. But as you become more skilled, you could start to learn about popular indicators to use as confluences with your support resistance levels, with your supply and demand levels as well. So now we can go into what are my favorite indicators as a 10, almost 11-year-old trader. I love the RSI to help find bullish and bearish divergence. So with my reversal trades, the stock's in an uptrend and I think it's going to reverse to a downtrend, I'll use the RSI to see if we have any bullish or bearish divergence. Okay, that helps me make better decisions with my reversal trades, right? Something else that's not necessarily an indicator, but it's something that I think is very important, is your ability to read price action and order flow. Now, order flow is going to be a software where you can actually see the order flow of buyers and sellers within a certain stock at certain prices. It's not an indicator that's plotted on the chart. Just like price action, it is a skill set to read price action, what price is doing at certain areas to get an idea of, are there more buyers or sellers at certain areas? It's not an indicator, but it's definitely a skill that you need to learn how to read price action, or you could learn to use softwares to read order flow on certain stocks. Those are the main indicators I use, and you can see right here on my screen, I use volume, right? I'm reading price action in real time. I look at the RSI to see if we have any types of divergences for reversals, and I simply trade off supply and demand and key levels of support and resistance. And even me, someone that's been in the market for 10 going on 11 years, I do not use a bunch of indicators. I prefer to trade with the big banks, the institutions, Wall Street. I choose to not trade like 95% of retail traders that fail. They use indicators. Institutions do not. I've learned how to trade alongside of the institutions. I've learned better ways to trade. That brings me higher odds and higher probabilities of being right more times than I'm wrong without the need of using a lagging indicator, something that, again, lags behind price, something that retail traders use. And again, if 95% of them fail, why would I want to do the same exact thing that they're doing? All right, so now let's go ahead and dive into a really simple setup, a really simple strategy that I trade that does not depend upon indicators, and it has north of a 70% success rate. And it is supply and demand concepts. Right? So when I come in and I identify areas of supply and demand, and I start to identify areas where I have overlapping zones of supply and demand across multiple time frames, that's how I start to identify areas that I want to take trades. So if I have at least minimum of 3 overlapping zones across 3 different time frames, I am looking to strategically take trades inside of these overlaps. So here's NQ, for example. We have a daily demand, 4-hour demand, and 1-hour demand zone here on NQ. There's a daily zone of demand. That's the biggest green box you see. Then we come down and we have this 4-hour zone of demand. And then inside of the 4-hour zone of demand, we have even a 1-hour zone of demand. And you see how the overlap gets very, very tight inside of the daily, inside of the 4-hour, and then we have that little tiny 1-hour overlap inside of the 4, inside of the day. When I have at least 3 overlapping zones across multiple time frames, and I have those clear small overlaps, those are my entries the first time price gets back down to that level. Stops go below that zone of demand. I set a standard 3-to-1 risk-reward ratio trade plan. And again, 70% plus of the time, these trades work out and hit that 3-to-1 risk-reward threshold. It's really simple. You just need to be able to go through multiple time frames and strategically mark up your areas of supply and demand first. Next, identify areas where you have overlap. Next, build a plan and make sure you can get that realistic 3-to-1 setup. Next, simply wait for price to come down, hit the overlap, and take the trade. And this strategy, this setup, this way of trading, it's very effective. It's very simple, and it's not dependent on indicators. So my point is, don't learn indicators in the very beginning. It's only going to delay how much time it takes you to get the profitability. I know from experience, I did just that for 3 years. Don't learn indicators at first. Learn the core concepts of trading, key zones, supply demand, simple but effective systems based on those more significant zones. And once you build a good foundation around that, once you get to a level of profitability, then go out there to see what indicators would support your edge, support your methodology to help you, again, increase your results overall at that time if there are indicators that you should be using to help give you more of an edge in the market. Indicators that will help be in line to help you make better decisions on the types of trades you're taking. Build the foundation first, then build on top of that with indicators, but yet strategically that will help you. That won't just give you more distractions, cause more confliction, or just be noise.